Good afternoon, everyone, and thank you for attending the internal auditor meeting. As you know, our auditor firm have been engaged to control an audit of Telstra. The purpose of today's meeting is to review our findings so far and ensure that we have addressed all necessary auditors post issues. Let's begin with Senior Manager Naz. Could you please give us a summary of your analysis of Telstra and the industry? We would like to ensure that we understand the company and the industry.
Thanks for having me. Telstra Company is an Australia-based company that provides telecommunications and information services to domestic and international customers. The group's consumer and small businesses accounted for around 50% of the total income for the Telstra. Telstra Enterprise, with the 30% of share of the total income, was the second biggest source of income. The company indicates a strong financial health in terms of the revenue and market share compared to its competitors. The group has maintained itself to be competitive for the largest provider of telecommunication service compared to Optus and TPG. However, the company's profit has been negatively impacted by NBN. The high NBN connection charges and cost pressures associated by the COVID-19 has contributed to Telstra's profitability decline over the past 5 years.
Okay, thank you, Naz. Nia, based on the analysis, which two key accounts do you think we should be pay attention to during the auditor process? We want to ensure that we have covered the relevant financial and non-financial accounts.
Yeah, no worries. So after looking at Telstra the other day, I've come to the conclusion that the two key accounts are accounts receivable and property, plant and equipment. Accounts receivable is financially significant because it's 4.07 billion equates to 65% of all current assets and 10% of all assets. The non-financial significance of this account is the nature and the industry of the business. With Telstra being a telecommunications company, a lot of their customers are on contracts and pay post-bill, meaning that they pay for their service after it has been used. This is why majority of Telstra's income is accounts receivable. It is important that these accounts are investigated further because there is that risk that the accounts may be overstated and make assets appear higher. There's also a risk of bad debt expense from customers not paying their bill. When we look at PP&E, it's financially significant as its 20.5 billion total equates to 58% of Telstra's non-current assets and 49% of all assets. So that is a massive percentage. 50% of Telstra's assets is pretty much just PP&E. This includes things such as their buildings and communication assets, which are used to produce revenue. When we look at the entity itself and the industry, it's very common for these types of businesses to have large amounts of PPE, as it's one of the main revenue-producing assets due to the nature of the business. In this case, it would include things such as Telstra brick-and-mortar stores, telecommunication licenses that may, which allow them to sell products or other authority to provide communication services. When looking at key accounts, we must also consider what can go wrong. For PP&E specifically, it would be asset impairment and depreciation. It's crucial that we investigate and perform substantial testing and controls testing on depreciation for PP&E to ensure that the asset is being depreciated correctly and is not overstated in the balance sheet. Thank you.
Okay, thank you, Mia. Now, Chen, could you please evaluate the overall auditor risk of Telstra based on our analysis of the company and its industry?
Yes, we assess Telstra overall auditor risk primarily in terms of Telstra financial statements, internal control process, and compliance with regulations. Telstra's revenue is audited according to Australian accounting standards and disclosed in the annual report. Depreciation of assets is properly recorded. However, we need to pay more attention to the fact that the industry have relative large risk of revenue recognition and assets impairment. The industry also faces various government tax regulations, which need to be checked. Due to the nature of its business, Telstra faces high risk Our assessment focuses on the company's internal controls related to data privacy and information security. Control risk also appears medium to high due to its complexity. So we can say that Telstra audit risk is high.
Okay. Could you evaluate the going concern risk of Telstra based on our findings?
Going concern risk is one of the most significant risks to be considered in Telstra. It's important to check for this risk as the risk of going out of business is quite high in the telecommunication industry due to rapid technological changes. As per the annual report of Telstra, the company has been making profits in 2021 and 2022, which shows a healthy financial performance. Even the net cash flow from operating activities has been positive in the last 2 years, which makes it certain that the company is not facing any problems with cash flows. Estimating the debit to equity ratio, there has been a drop from 1.78 times in 2021 to 1.47 times in 2022, indicating a reduction in total debit. The company has made a significant reduction in its dependency on debit capital. Moreover, the company has made significant investment in technology, and there has been no significant loss of revenue from customers. Therefore, it is safe to consider that the company is going concerned and there's no significant going concern risk.
Okay, thank you, Chen. I think I have one more thing, Nan. I want to follow up on your meeting with Telstra Finance Manager Mark. How's go?
I sent an email to Mark explaining our concern about promotional fees for the second quarter, and he scheduled a meeting with me for this morning and gave me a memo during the meeting. They identified a 5 million error. The promotional fee paid to this online platform in November and December 2021 will misclassify under another account instead of as an expense. Mark said that he had his team check all invoice and promotional expenditure since yesterday morning in order to identify the error. He said that they had a new staff member and it appears that he coded all the misclassified items. So his team went back and evaluated everything he had coded, including all of the journal entry and invoice. He is fairly certain that they have identified all of the errors and reclassify everything into the right account.
So we need to make sure they have a complete and accurate description of the year. And also, you may need to return the reports.
Will do. I will rerun the report. And the memo includes the corresponding work they have done for this issue.
So did they consider the internal control concern of this?
Yes, I raised this issue, and he said he would try to look into whether it was a control design issue or just an isolated incident. Because it's clear that all new hires should go through training on all process. He said he would respond to this issue by Friday.
Perfect. But should still become urgent around these issues.
Sure, I will follow up.
All right, guys. Based on our discussion, we have identified several key concerns and risks that need to be addressed in our audit. We will ensure that the communicate this effectively in our final report to provide high quality assurance to our clients. Thank you all for your contribution today. Let's continue to work together, ensure that we meet our professional standard and provide the best service to our clients. Thank you, everyone. Have a good day.
Thank you.
See you.
See ya.
Yeah.